On the 8th day of public hearing on the 2024 Finance Bill, Coca-Cola has joined the growing list of opponents to the proposed eco-tax, which would increase the cost of goods packaged in plastic products. The company highlights that their ongoing environmental conservation efforts have been fruitful, creating jobs for many, and that imposing an environmental tax would greatly hinder this progress and lead to job losses.
The levy, we see that could be an impediment to the implementation of the Sustainable Waste Management Act, and also will hinder investments in the circular economy. Not only will we be impacted as a business, but also our partners across the value chain. Our distributors will need to maintain their margin, and we could see them also taking price as their margins get squeezed. We talk about the impact on FDI, the foreign direct investments, because with this, then we know that you increase prices, then your volumes or your sales will decline, which may not be the right place where we want to invest into this country.
Coca-Cola's management warns that the proposed tax could make their products cheaper in neighboring countries, leading to a market shift that could benefit those countries at Kenya's expense. This could force Kenya to rely on imports for products it currently produces.
This levy will increase the cost of doing business. We are seeing the cost of packaging for CSDs, or carbonated soft drinks, to the tune of 80%. And for the water, the Keringet that is in front of me here, the cost will increase by 53%. One point I would like to raise here is that the levy, again, taking the point of Keringet here, is at 150. The resin that we buy to produce this bottle here will cost us 120. So the levy itself is actually more than the cost of the resin.
This comes just weeks after their company announced a major investment plan while hosting President Ruto at their headquarters in Atlanta. Coca-Cola had declared the intention to invest $23 billion over the next 5 years to boost production in Kenya, which was expected to create more jobs and inject more money into the Kenyan economy. Coca-Cola currently generates about 10,000 jobs in the region, both directly and indirectly.
For the last 20 years, we've made over 595 changes, administrative and others, in tax policy.
When we look at our spend, Chair, 82% on what is spent on our beverages goes back to this country. So for every shilling that is spent, 82 cents is added value to this economy. I guess when reality is you invest what you make. So if the reality on the ground is changed by macros, then you consider how much.
David Kagina, K24, Nairobi.